This segment sponsored by Foster Financial. Today is Wealth Wednesday, so we are so excited to have Caleb Doane, Vice President of Foster Financial, join us in studio to share his financial advice. Hi, Caleb.
Hi.
How's it going?
It's going well, thanks.
Good. Okay, so today is going to be interesting because we have covered so many different types of investment and retirement accounts. And today we're going to talk about just kind of all of them under one umbrella, but you're going to break down the risks.
Yeah, that's exactly right. I know we talked a little bit about sort of the spectrum of investment options a few months back. On the more conservative side, there are things like bonds and CDs, and then on the more growth-oriented side, there's equities and things like that. But I think it's helpful to maybe take another look at it because the market has shifted a little bit, even in the past couple months. And so I think over the last, probably 10 years preceding 2022, the conservative side of people's portfolios, CDs and bonds, had really, really low yields because interest rates were so low. So, if you invested in a bond, the interest rate that you were getting was, 2% or something like that.
Okay.
And because of that, people were saying, hey, I don't really like that this is only getting 2%. I'm going to shift more to the equity side, the more aggressive side.
Okay.
And because of that, maybe going into 2022, when the markets dropped, people realized, wow, I might have been a little too aggressive on my portfolio. My account dropped 25% or whatever it might be. And so we had different people come to us, new clients at that point who, said, hey, I was self-managing my 401k. It just dropped 25%. What do I do? Okay. And a lot of times our advice to those people at that time was, hey, let's keep you at the same risk allocation so that your accounts can actually recover when the market comes back. If we were to sell and go really conservative right now, when the markets come back, your funds might not recover.
Right.
And so we kept them at the same allocation, and now, over the past 7 months, the markets have come back pretty significantly.
Oh.
And so right now, like the S&P 500, for example, is really within arm's reach of its all-time high. And so really at this point, we're starting to call some of those clients and say, hey, now might be a good time for you to back off some of the risk in your account. We can get a little bit more conservative. That way, if and when the markets drop again, as they typically do every 5 or 10 years, whatever it might be, your account won't go down, hopefully 25% this time. So.
And that's what is the best thing about having a financial advisor like yourself, because you are looking at the rates, you are looking at the market, you're seeing and tracking and just really understanding things that we wouldn't know to assess. And what you serve is a whole bundle of retirement accounts. And that's the thing. Like, I know we talk a lot about certain retirement ages, but anything that has to do with future financial planning, right? You don't have to be at that retirement age to utilize your services.
Right. Yeah, that's exactly right. We have people of all ages kind of coming to us, and all of them have sort of different risk profiles that we need to invest towards. And so that's certainly one piece of it. And then the other side of risk is that we talked about how in the past that conservative side of people's portfolio wasn't really yielding very much, and that's really changed now. I mean now people will see the ads for CDs at their bank, giving 4.5% or 5% or whatever it might be. And so there's a lot of people who have enough saved for retirement where really all they need is 5 or 6% return to sort of sustain them throughout retirement. So there's some people who now can get in a more conservative position and say, hey, I don't want to ride the roller coaster of the stock market anymore. I want to get a little bit more conservative. And for some people, it's a good time to do that.
And so you talked about the change and how things have changed in the last 7 months. And so I'm curious, what implements those changes? Like, what are the variables that really affect it?
Yeah, so there are really two. One is that interest rates have continued to go up for the past 7 months. So the Fed has continued to raise interest rates, which makes those CDs and bonds yield a little bit more. The second thing is that the market has really recovered. So a lot of people who saw their accounts go down in 2022 have seen those same accounts rise again in 2023. And so, it depends on people's individual situations, how risky or how conservative they should be invested. But one of the things to take a look at is if you were a person who in 2022 was kind of just terrified of the accounts going down and you felt like you were on a roller coaster, that might be an indication that, hey, maybe we should get a little bit more conservative now.
Okay. Okay. Yeah. So it's like that question of how do people choose the best way to invest,
Right.
And even when they're entering into the game, when they have an initial account that they're looking to diversify, how do they make that decision?
Yeah, we
advice?
actually, we have like a risk quiz for people to take that lays out a bunch of different factors. Basically, how long do you have until retirement? When are you expecting to use this money? You know, how would you react in these certain situations? So we can really get an idea because, you know, one, we want to help people reach their goals, but we also want to make sure they're kind of comfortable along the way and not getting too worried about the ups and downs in the market.
Okay, well, that's awesome. Thank you so much, Caleb,
thank
for
you.
sharing with us today. And Foster Financial can actually help you with your risk score. As Caleb said, they have an assessment test, so you can contact them to understand more and to get proper financial advice. We'll have their phone number listed below, and we'll be right back. This segment sponsored by Foster Financial.